Earlier today, somebody had forwarded me a tweet from Brent Johnson. He's the guy that has this milkshake theory. He's the person that I bet a gold coin on whether or not the dollar would be higher or lower from January of this year to January of 2021. When we made the bet, the dollar index was 96.7. Today, it's about 92. In fact, it was lower intraday. We got below 91.80 on the dollar index before we had a reversal Tuesday type rally today. And so I think we closed up at around 92.30. The euro ran into some resistance at $1.20. And so it got pulled back down to about $1.19. But I don't think that this reversal Tuesday rally in the dollar has any significance at all as far as putting in a low for the dollar or some kind of change in trend. As I'm recording this, the euro is about 119.14. So the euro chart looks very, very strong. The dollar looks very weak. I think that the low that we put in today of 91.746 will not stay the low for very long. I think we'll take that low out before the week is over, maybe even by tomorrow. But of course, we do have some economic news that is coming out. We have the jobs report coming out on Friday, so that can certainly be a big mover in the currency market. So we'll see. But the dollar to me looks like it's going to get very, very weak. So I think Brett Johnson is going to be owing me another gold coin, although I think there's a lot more at stake than a single gold coin. Oh, by the way, Brett lost the bet that we made a year earlier. He already paid me a gold coin because he bet that the next Fed move would be a hike. I bet that it would be a cut. I won, and I got my first gold coin. And so this bet is double or nothing. And so far, it looks like it's going to be double. But I'm not going to count my chickens until they hatch because we have to wait until January. It's possible that the dollar could rally between now and then, but I think it is highly unlikely. But anyway, the tweet that was forwarded to me coming from Brett Johnson had to do with his argument that we don't have inflation, that we're going to have deflation. And he's basing it on the fact that the Fed is not really printing money, or even if it's printing money, it's not inflationary because the money isn't being spent. His point is that the Fed is lending money, not spending money, and that in order for there to be inflation, the money needs to be spent. It's not simply enough to loan it, it needs to be spent. And to me, this is a distinction without a difference. What does Brett Johnson think is happening with the money that the Fed is lending? That money is being spent. I mean, for example, in the last 5 months, the Federal Reserve has purchased $1 trillion worth of mortgage-backed securities. That is approximately 1/3 of all of the mortgage-backed securities that exist. And in fact, at its current pace, if the Fed continues to buy mortgages for another year, it will own the entire market. It will own all of the mortgage-backed securities that exist. I mean, think about that. I mean, if you think we have capitalism, how do we have capitalism when all the mortgage credit is flowing from the government? In fact, not only does the government supply the credit, it's also guaranteeing the mortgages. Because remember, the mortgages get originated, and then the U.S. government guarantees the mortgage, and then the Federal Reserve buys it. So the government is both insuring and originating the mortgages. And of course, how does the government insure the mortgage? Where does the government get the money if the borrower defaults? It gets it from the Fed. So the Fed is insuring the very mortgages that it owns. It's insuring itself. The whole thing is one Ponzi scheme built on another. But the one thing this is not is capitalism or a free market. This is a bubble that is completely created by socialism, by the Federal Reserve and the government. But the point is, even though the Fed is technically lending the money is being spent. It's being spent to buy houses, right? People are borrowing money from the Fed, and then they're using it to buy houses or remodel their houses, or who knows what they're doing. Or if the Fed is simply buying a mortgage that is already in existence, right? Well, what is the person doing who sold that mortgage to the Fed? Now they have all this cash where they used to have a mortgage. Now they've got this cash. They're spending that cash on something. So the money is being spent. Even if the Federal Reserve is technically not doing the spending, it's doing the lending. Whoever is getting that money from the Fed in terms of a loan is spending it. And of course, the biggest spender of Fed loans is the United States government. The United States government right now is funding itself from the Fed. Better than 60 cents out of every dollar the federal government is spending. And it's spending over $7 trillion now. But better than 60 cents out of every dollar is coming from the Fed. It's not coming from tax revenue. More money is being printed and spent than collected in taxes and spent. Now, technically, these are loans, right? The Federal Reserve is loaning money to the U.S. government, right? The U.S. government is borrowing from the Fed and then spending that money. So I guess technically Brett Johnson is right. The Fed didn't spend the money. They loaned the money. But then the government spent the money that the Fed loaned them. So what's the difference? The money is still being spent. Just because the Federal Reserve isn't spending it, what difference does it make? The federal government is spending it. And if you think of the Federal Reserve as part of the federal government, then it's just one part of the federal government making the loan and another part doing the spending. It's the same thing. It doesn't make a difference. The money is getting spent. And of course, it's not really a loan because it's never going to be repaid.